Hello and what is going on, lovely people of the internet? It is Money here with another video for you guys today. Today we're going to be talking about Aterian, or ATER. This stock is currently in the middle of a squeeze. There's some evidence that some shorts have covered, but I really can't tell you how many have covered because of this T+2 settlement date for when shorts cover. So I really do believe, and I'm just going to spoil my price target right now, from this point forward, it's either 100% on the upside or 50% on the downside. So huge amounts of volatility or risk are implied with this stock, but I think it's leaning towards the bullish side, and that's just from the options flow that we've been seeing as of today. There's tons of big bullish bets on this stock still, and shorts are still hurting. So until there's at least one sign that shorts have covered and new shorts are now in, and those shorts have more leverage, I think there's still some room for this stock to run. So that's my general thesis. Just from the start, we're going to get into the data and really understand why exactly I feel this way. But if you guys do enjoy these updates, third video of the day, leave that like on the video. Liking the video is the #1 way to help me out here on this channel, and it's always highly appreciated. I'd also like to thank my sponsor on this video, which is public.com. They're an amazing stock brokerage on your phone, so you can click the link below to check that out as well, but more on that later. And let's get right into the video. Alright, so here we have the live short interest changes for ATER, and as you guys can see, we're currently sitting at a 53.4% short interest percentage of free float, with 11.41 million shares currently being shorted. Now they have a 20 million share float, so it's a pretty low float, so there's gonna be volatile moves on this stock, to say the least. Now this is where it's crazy, 232% cost to borrow. Now these micro float stocks, the problem is that short interest is only going to get so high. Even at a 53% short interest, only 11 million shares are currently being shorted. If you compare that to different other types of stocks that have much higher floats, more short interest gets accrued on those stocks. So puts it in an interesting situation, but since there are less shares to be shorted, it also makes the cost to borrow on these stocks typically extremely high. So it puts it in a very interesting situation. As long as the volume doesn't get too out of control, these things can squeeze like absolute crazy. I've seen 300, 400, 500% gains on stocks that are set up very similar. Now today we saw another 1 million shares almost that were borrowed, and that is a signal that shorts are coming to pile on even higher. So at this point, these shorts could be in a bad position, but they could also be positioned very well if there is a certain sell-off in this stock. So we'll get into that a little bit more later. And then the return shares, we have 315K. Now we saw more return shares in previous days, but this is where it gets a little fishy, and it makes it hard for me to analyze where we are in the short squeeze. So use your best judgment, but return shares don't get reported for 2 days after they were returned. So today being Monday, these are the return shares from Thursday. So a lot has happened in this stock since Thursday. So it's very hard to really know what point we are in the short squeeze, if older shorts have covered yet, if newer shorts have covered. It's hard to tell because the delayed return shares data. Now, we'll just look at the utilization real quick. 99.94% utilization. Absolutely insane. Days to cover at 1.61 currently. Not the worst that I've seen. That's actually pretty decent. And yeah, let's just jump right into this chart. First thing I want to look at is that utilization and the average age on loan. So we actually did see the average age on loan go down a little bit during this first I don't want to say squeeze, but it did go down a little bit, which did signal a little bit of short covering there, because the average age on loan went down from 42 days back to 24 days. So that's definitely some proof of a short squeeze, but at the same time, utilization was going up. So we can see we have the average age on loan and the utilization for this stock. I like to look at these two figures first. We can see that right here. So on this first run up around August 25th, that was when this stock first started seeing some crazy price action. And you can see the average age on loan right before this happened on August 27th was 42.94 days. Utilization was at 87.92%. So utilization continues to climb here, and average age on loan starts going down. It goes down all the way to 24 days on average. So what that means to me is that newer shorts got in this region right here. In the last week of August, a lot of new shorts accrued into this stock, pushing the utilization up to about 100%. But they're also down because we can see the stock price has gone up since then. So all of these new shorts, they're hurting right now. They're paying that huge cost to borrow, and it's just pretty insane. Now, one thing that you might see short interest go down here from 67% of free float all the way down to 51%, and we're now at 53%. Now, this typically happens on Ortex when you get new exchange reported numbers, which we got on September 10th, and you can see from September 9th to September 10th, it goes down to 51%. So don't think that that's short covering, because it's not. It's just Ortex updating their data as they get these newly reported exchange numbers. So it's still very high short interest at 51%. Don't let that deter you. There was no short covering from what I can tell based off of this figure alone. Now you can see that there definitely was some short covering. We're looking at the average age on loan of returned shares. So these are basically how long shares were being shorted for once the shorts actually covered. So if this figure starts spiking up, that's actually a good sign that some of the older shorts were covering on this stock. So it goes from 5.4 days on loan, and you can see it spiked up to about 69 days on loan. And we saw that the average age on loan right now is about 22 days. So that's you can't really ignore that. Some of these older shorts did close their position, and I'd say that was around September 7th when that happened last week, but it went right back down. So we don't know what exactly is happening right now, because we saw the past few days this has seen crazy amounts of price action. So very well, a lot of shorts could have been covering, and we just don't know, which is unfortunate. I wish we did know, but we don't know. Quick intermission here to talk about our sponsor today. I apologize, we'll get right back to the video, but today we have to talk quickly about public.com. It's an amazing stock brokerage on your phone, so iOS or Android. You can download it on either one of those platforms. It has one of the best, if not, it has the best user interface that I have ever seen in terms of a stock brokerage, but it's also like a legit brokerage that doesn't sell your trading data. They don't do a payment for order flow, unlike Robinhood and Webull. Those two brokerages suck. They're trying to lure in new customers, but they're trying to manipulate and take advantage of those new customers rather than treat them right. And that's where Public steps in, because it's such an easy to use platform, but they treat you right. They don't sell your trading data. They don't do payment for order flow. They rely off tips alone from their customers in order to profit. So just like if you're a waiter or a waitress, you're going to give the best service to the people who are eating at your restaurant because you want to get good tips. So you're starting to understand what is going on, and along with this comes getting the best fills for your order. So if you were buying a stock for $10 on Robinhood, they'd probably fill you at $10.02, losing 2 cents per transaction. But Public, they'll fill you for that $10 on the dot. So that's why I like Public. Amazing stock brokerage. Check it out using that link below in the description or in the pinned comment section, and claim up to $70 in free stock just for depositing at least $1 on their platform. Anyways, guys, let's get right back into the video. We can also see here on this orange line the amount of shares that were actually returned. So we got about 1 million shares that were returned on Friday. So these are the shares that were closed on Wednesday. So that was when the price was at 7 and a low of 712. So now we're even higher. So I'm going to just assume here, just based off of what we see right here, is that plenty more shares have been returned since this last figure of about 1 million shares. So I'd say maybe 3 to 4 to maybe even 5 million. We don't know because of this T+2 settlement date, which makes this extremely hard to analyze, which is also why I say it can either go up another 100% or go down another 50%. So at this point, maybe your best friend would be a nice straddle option. It's where you buy a call and a put option at the same strike price, and you're basically betting on the volatility of a stock. So you'll make money if the stock goes down, you'll make money if the stock goes up, but if the stock doesn't move at all, that's where you are going to lose that premium. So it's definitely something to consider when we're in a state where we don't know if it's going to go up or continue to go down. Now, with all that being said, I just need to illustrate to you guys how much these shorts are actually hurting. So here is the chart of ATER. And we know the average age on loan is about 22 days. So most shorts are honestly in around this area, you know? And around, we saw a huge spike up too in this area as well. So we're gonna have to do the box technique. We've done this before, and it's honestly just an amazing way to illustrate where exactly shorts could have possibly made money. And as you guys can see, not very many places, at least on this run up. So that's why I do think there is possibly still juice left in the tank. We saw that huge volume spike as of this morning. We could see the same thing going into the after hours as well and on tomorrow's trading day. But typically the few days after that, the week after that, the volume will likely die down. And we'll have to see the correction. Once you see the correction, there's always a correction, guys. Every short squeeze play, GameStop, AMC, it's not all fun and rainbows. It's not a typical. It doesn't just go up parabolically similar to this. It's usually met with a large correction of at least 20%. So that is the downside risk. Now, if we go to this day chart, draw back in this rectangle, you can see there was a bit more price action where this stock could have actually made money, but I assume at this point those shorts probably have covered, because as you guys can see, anyone who got into this range, the stock continued to dip a lot, all the way down to $3 per share. So at that point, they're pretty insane if they didn't cover. And like I said, a lot of short interest was accruing in this range. So those are the shorts that we are mainly fighting, and those shorts are all down right now. So all of these shorts in this current price region are down. It's pretty remarkable. As you guys can see, only a few wicks of these candlesticks are where shorts could have made money, and we saw even like 1 million shares were added today. So there's definitely room for this thing to continue to shoot up, and that's why I am still leaning towards the bullish side on this stock currently. If we go to unusual whales, we can get an idea of what the whales are doing with this stock. And as you guys can see, there was a $5 million bet, a bullish call option, 1750 strike price, expiring this Friday. $5 million. Now, this one, we're going to have to do a deeper dive. It was at 10:40 a.m. 10:40 a.m., you guys can see the stock was at $17.29. It has gone pretty much flat or even up a little bit throughout the day, but still, it's not like they bought this dip perfectly here at $15. They bought in around $17 range. So this $5 million bet is betting that this continues to go higher. And honestly, from what I'm seeing, is the momentum can continue. It's gonna be met with a huge sell-off, obviously. And then there was this other alert today from 913, also bullish. They're selling a put option at the 15 strike. So I am pretty confident there is still some bullish room for this one to run, but obviously it's not financial advice. And like I said, it can be met with that 50% correction at any moment. So it's extremely risky, and that's why you might want to consider that long straddle position. But again, not financial advice. Also here, looking at the Ortex data, we can see that there was so many different short squeeze signals. These were all on Thursday, and they have not yet released a sell signal. We were looking at these signals for support.com. Once that thing squeezed, Ortex had a bunch of different sell signals. So we're going to wait. We're going to see if there's a sell signal for ATER. Then that is definitely time for you to at least consider getting out. But there's still time left on this short squeeze. And like I said, I think there still is at least some room to run. If it does squeeze, it'll go up very quickly, very fast. In like a few hours, you're going to have to catch that. You're going to have to pay attention to it. And then again, guys, I just can't stress it enough. 50% correction. Always be prepared. More bullish juice for you guys. It's ranked number 2 on Fintel for their short squeeze scores, having a 97 out of 100 short squeeze score. The only thing it's behind is support.com currently. And yeah, that's my analysis on ATER. Again, it's currently been having some crazy price action over the last few days. So that is when it is the most difficult to analyze these short squeeze plays because of that T+2 settlement date. So there can definitely be some holes in my analysis, and I am making a few assumptions. However, overall, I do think this is leaning towards the bullish side. So my price target is obviously, if it does continue to go up, $34 per share. If it crashes down, it'll probably find support around $8 per share. It's hard to tell, and I'm sorry I can't just give a 100% bullish outlook because it is hard. But as we saw from that box analysis, most shorts are hurting, and when most shorts are hurting, that's typically a sign that there is more to come in a short squeeze. So take it as you will. That's my analysis. I hope you guys have enjoyed the video. I enjoyed making it. As always, leave a like on the video if you do appreciate this analysis, and subscribe to the channel and hit that bell if you guys want more. That's about it. Thank you, Public, for sponsoring this video. If you want it up to $70 in free stock just for depositing at least $1 on their platform, you can use that link below in the description or in the pinned comment section to sign up. Amazing stock brokerage on your phone. Anyways, guys, I hope you guys have a wonderful day. Peace.